Hello students, welcome to Accounting Explained at Accountwise Academy. This is Lata Venkateshwaran. This is the part 5 video of chapter 3, recording of transactions. In this video we are going to cover journal entries for GST. This GST I have covered elaborately while teaching chapter 2. That I have uploaded as a separate video, the link of which I will be sharing it in the description box. You can go through it for a better understanding. If you want to look into the important questions and MCQs of chapter 3, chapter 2 and chapter 1, you can look into the shorts of our channel Accounting Explained at Accountwise Academy. I am going to give a brief description on GST before proceeding further. GST is nothing but goods and services tax. Tax on consumption. GST taxes the final use of goods and services. It charges or it taxes only the final consumer, whoever uses these goods or services, and not their production or sale. It will not be charged neither at the production point nor at the selling point, but only at the final consuming point it will be charged. When you buy a product, you will see a bill. No, there will be two categories in it, CGST, SGST. We will see what is CGST. Central Goods and Services Tax is a full form for it, and it goes to the central government. The CGST part of the bill which you see will go to that taxable amount will go to the central government. SGST means State Goods and Services Tax. SGST part you would have seen in the bill, no, that will go to the originating state. If the originating state is Karnataka, then that amount will go to the originating state, that is Karnataka. Let's solve a problem for journal entries where there is GST transactions in it. This is the problem which we are going to do now, which I have taken from your textbook. Record necessary journal entries assuming CGST at 5% and SGST at 5%, and all transactions are occurred within Delhi. So the originating state is Delhi and the transactions has also occurred within Delhi. First transaction. Shobit bought goods worth rupees 1 lakh on credit. Second point, he sold them for rupees 1,35,000 in the same state on credit. Okay, he has sold it in the same state and that is also on credit. He paid for railway transport rupees 8,000. Fourth, he bought computer printer for rupees 10,000. Fifth, paid postal charges for rupees 2,000. Let's analyze each transaction separately and do the journal entries taking into account CGST at 5% and SGST at 5%. Okay. Let's analyze the first transaction. The first transaction is Shobit bought goods worth 1 lakh on credit. This CGST at 5% and SGST at 5% is common for all the transactions. Let's see how to do it. Okay. So Shobit bought goods. When you say bought goods means what? It is purchases. When you buy goods for business, it is called as purchases. Okay. When you buy goods, expenses increase. So purchases has to be debited. Next, CGST is charged at 5%. See here. Right. So it is called as input CGST because when we are buying goods, we are paying it. This is an expense. CGST is a tax. So it is increase in expense. What you have to debit? Input CGST has to be debited because it's increase in expense. How much it has to be debited? 5% on 1 lakh, which is 5,000. Again, see here SGST at 5%. This is also called as input SGST since we are buying it while we are paying it while buying goods. Okay, input CGST, it is a tax, it is increase in expense, therefore it has to be debited. Same thing, 1 lakh into 5 by 100 is 5,000. Debit. Okay. Next, they have bought goods on credit. Credit means we have to pay later. So increase in liability. When you are going to pay a person later, they are called as creditors. So creditors has to be credited. How much is the amount? Purchases is 1 lakh. Input CGST is 5,000. Input SGST is 5,000. And creditors will be, we are liable to pay creditors 1 lakh 10,000 along with taxes. The journal entry will look like this. See here, purchases account, debit 1 lakh. Input CGST account debit 5,000. Input SGST account debit 5,000. 2 creditors, indent and right, okay, it's 2. 1 lakh 10,000. Being goods bought on credit. Next transaction. He sold them for 1 lakh 35,000 in the same state. Whatever he has bought, he has sold them for 1 lakh 35,000 in the same state. They have not mentioned if it is for cash or credit. You have to assume it is on credit. This we have seen elaborately in the previous video. Okay. So, when you sell goods for the business, then it is called as sales. Okay, sales means increase in income. When there is increase in income, you have to credit it. Okay, what is the amount? 1 lakh 35,000. Next, CGST at 5% and SGST at 5%. This you are going to collect from debtors. Since you are going to collect from, though it is a tax, you are going to collect it from debtors and pay it later. We assume it is as increase in income. When we bought goods and we paid CGST, what did we say? Input CGST. Now, for selling goods, we call the CGST as output CGST. Okay, that has to be credited. Amount is 1 lakh 35,000 into 5%, which is equal to 6,750. Next, take SGST at 5%. So it is called as output SGST. Increase in income, this is also credited, and the amount is 6,750. Now we have sold it on credit, no? Since we have sold it on credit, it is going to increase what we own. What we own means it is going to increase our asset. So if someone has to pay you, what do you call them as? Yes, we call them as debtors. So debtors has to be increased. Debtors are liable to pay this amount, 1,35,000 plus 6,750 plus 6,750, which is 1,48,500. Journal entry for the second transaction is debtors account debit 1,48,500 to sales account 1,35,000 to output CGST account 6,750 to output CGST account 6,750 being goods sold on credit is the narration. Next transaction is he paid railway transport rupees 8,000. Okay, when you pay expense, what will happen? It will increase your expense. Increase in expense means it has to be debited. So railway transport, we are not taking railway transport separately. We club it together and we call it as transport charges. Whatever the transport charges we incur, no, for even for vehicles taking the goods from one place to another, everything will be clubbed together and will be called as transport charges instead of taking multiple accounts. Transport charges has to be debited. Here see transport charges account debit 8,000 we have taken. Next, CGST at 5% and SGST at 5%. You are going to pay this tax on some expense. So it is called as input CGST and input SGST. Again, these two are increase in expense. Okay, and it has to be debited. So input CGST is 8,000 into 5 by 100, 400. Input CGST account debit is 400. Similarly, input SGST is 400. 8,000 into 5 by 100. Okay, input SGST account debit is 400. Here he paid. Usually when you pay this large amounts, no, like 8,000 and other things, we don't pay by cash, we pay by bank. So when you pay by bank, what happens? Your bank account is an asset, right? So it decrease in asset. Decrease in asset means what we have to do? Bank has to be credited. Since you are going to pay this whole amount, bank has to be credited with 8,800 to bank account 8,800 being transport charges paid. The next transaction is he bought computer printer for 10,000 rupees. So computer printer is an asset. We are going to use it for more than a year. So it is an asset. When there is increase in asset, we debit. So computer account debit 10,000. The CGST and SGST are going to pay when you are going to buy, that is for expenses. Okay, so it is called as input CGST. Input CGST is 10,000 into 5 by 100, which is 500. Again, input SGST is 10,000 into 5 by 100, it is 500. So when nothing is mentioned, we assume that they have paid by bank. By bank means it is decrease in asset. When there is decrease in asset, what you have to do? You have to credit, right? So to bank account 11,000. The narration is being computer printer bought. The next transaction is paid postal charges rupees 2,000. When you pay postal charges, it is increase in expense. Increase in expense means you have to debit it. So postal charges account debit rupees 2,000. Again for expense you are going to pay CGST and SGST. So it is called as input CGST and input SGST. It is increase in expense. So you have to debit it. So input CGST is 2,000 into 5 by 100, 100. Input SGST is same 2000 into 5 by 100, it is 100. Again they have not mentioned anything. We assume that we are paying by bank. So bank, when you are going to pay, that is decrease in bank balance, which means in other words it is decrease in asset. When there is decrease in asset, what we have to do? You have to credit it. So credit to bank account 2200. Narration is being postal charges paid. Now we are going to do a working note where we are going to club all total input CGST, total input SGST, total output CGST, total output SGST and find out the net CGST payable and net SGST payable. Okay, so total input CGST is from all the journal entries we have clubbed 5,000, 400, 500, 100 which amounts to rupees 6,000. Total input SGST is again taken from the journal entries 5,000, 400, 500, 100, 6,000. Output CGST is rupees 6,750. This we are taking from the sales journal. Similarly, output SGST is 6,750. Net CGST payable is 6,750 minus 6,000, it is rupees 750. Net SGST payable is 6,750 minus 6,000, it is 750. Let's see how we are going to do the journal entry. First, what did we do with the output CGST? Output CGST, we credited it. Now since we are going to cancel it and we are going to find out the net balance, we are as a debit now. Output CGST account debit 6,750. Similarly, same with the output SGST account debit 6,750. Input CGST, what did we do? We debited it first. Now we are going to cancel it. So what we are going to do? We are going to credit it to input CGST account 6,000. See, total is 6,000 CGST. Input SGST account is 6,000. Here see 6,000 and to electronic cash register account. What is electronic cash register account? Electronic cash register account is an account of the taxpayer maintained by GST system, reflecting the cash deposits in recognized banks and payments of taxes and other dues made by the taxpayer. So this is being maintained by the taxpayer, and this amount, whatever is the differential amount which you have to pay, is transferred to this electronic cash register. Okay. So electronic cash register is the difference amount. See, what is the difference amount here? 750 plus 750, which is 1500. That is what we are taking it here, being GST set off and balance paid. With this, we are finishing the journal entry for GST video. Hope you understood this clearly. If you have any doubts, you can just ask me in the comment section. If you would like to inquire about the online classes which I take, or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.